Do not buy Aboitiz Power. Do not buy Aboitiz Power if you do not want to be part of the great transformation journey of the company that has been in the industry for over a century, energizing 1 in every 5 homes nationwide, and is bridging the energy supply-demand gap as it leads in electrifying and pumping the renewables revolution. But if you want to capitalize on AP's prime position to capture the surging domestic power demand, its aggressive green capacity expansion, and its favorable financial standing to concretize growth plans, buy AP with a target price of 41 pesos, offering a 29% upside. Incorporated in 1998 as the energy arm of Aboitiz Equity Venture, AP is a vertically integrated frontrunner in the Philippine power industry. Driving its top-line growth is its generation business, accounting for 54%, supported by its 2 other segments, distribution and retail electricity services, that make up 29 and 17% of its sales, respectively.
On to our first point. The energy demand in the Philippines is expected to grow twofolds by 2030, emerging as the fastest-growing economy in the ASEAN region. This is propelled by the post-pandemic economic rebound, further driven by the increasing electrification rate in Mindanao. However, continued growth in electricity consumption presents near-term challenges as the power supply continues to tighten, magnified by DOE's coal moratorium and the depletion of Malampaya. Aboitiz Power holds the nation's second biggest generation, distribution, and retail electricity businesses, with its generation segment holding nearly 20% of the domestic market share. It is the most diversified power generation company with 6 mix of technologies. As it explores high-value adding ventures like GNPD, AP is definitely a vital player in sustaining the nation's energy grid. Lastly, as the second biggest player in the West End market, supplying 19% of its output, AP's high spot market exposure among peers allows it to benefit the most from the elevated spot prices. With all of these, AP is in the prime position to capture the surging domestic power demand.
For our next point, AP is the Philippines' biggest provider of clean energy, the first mover in hydropower space, aligning its corporate growth plans with DOE's 35% renewable mix target. AP is investing 190 billion pesos in the next decade to achieve a 50-50 balance between its RE and thermals by quadrupling its clean energy capacity. Supporting its expansion plan is its synergistic partnerships like JERA, the largest genco in Japan, enabling AP to build a 1,000 megawatt LNG power plant in the foreseeable future. Lastly, with its 27% capacity additions to its 2023 portfolio and its solar-focused pipeline projects set to be completed on 2026, AP has the most aggressive clean energy expansion in the domestic market, allowing it to benefit the most on the cheaper generation costs of renewables and in being insulated from the fossil fuel market volatility.
Cumulatively, AP is in the forefront position to capitalize on the regional and local renewable transition, and this is cemented by its top-notch ESG policy integration. Affirming AP's strong ESG framework is its inclusion in FTSE4Good Index since 2018, its lowest material risk among its peers, and the highest ESG risk management score among all the Philippine GenCos in the Sustainalytics ratings. In addition, with a score of 3.7 over 4 on the ESG relative scoring that we conducted, AP outperforms FGen and SMCGP in all 3 pillars of sustainability as AP 1. Spearheads programs like carbon sink management, planting 1 million trees to offset emissions. Its green efforts collectively translated to a carbon productivity boost. 2. AP has served nearly 1 million beneficiaries through 1,200 plus CSR projects and took part in providing livelihood programs like the Brick Hub project. And 3. AP's management team is composed of 9 highly competent directors with in-depth knowledge in their core industries. 33% are independent directors, and the remaining are part of the extended appointees family, allowing it to promote and secure the company's sustained growth.
Heading to our third point, AP is set to have favorable financial position to concretize growth plans. AP is set to grow its revenues at 8% CAGR, driven by 10% CAGR on generation and RES and 3% CAGR on distribution segment. 1,008 megawatt additions in net attributable capacity will help deliver growth on generation and RES, while its distribution segment would be fueled by long-term energy consumption, high electricity rates, and its significant market share on the captive market. AP is primed to take advantage on high BCQ and spot price by offering new power supply agreements and selling to WestM through its excess capacity from GNPD and new generation projects. Additionally, AP has been able to maintain a double-digit ROE while retaining a sustainable debt load compared to peers through effective utilization of leverage, a top credit rating, and a strong liquidity position. Consequently, we expect its D/E ratio to decline as a result of higher operating cash flows supporting its aggressive capex. Furthermore, we anticipate AP's net margin to improve by 480 bips for the next 5 years as AP sets to benefit from the expected drop in coal and oil prices. AP will also benefit from projected lower operating costs due to improvements in renewable technology and lower feeder loss for the distribution segment. Its margin expansion would also be supported by lower borrowing costs brought on by projected deleveraging and a reduction in average effective tax rates from 21% to 19% by 2027. Overall, these synergies would enable AP to grow its earnings at a CAGR of 10.8%. Lastly, AP is set to grow its free cash flow and enable a higher than pre-pandemic ROE of 15.7% by 2027.
We see AP as a superior investment with the 1-year target price of 41 pesos per share, presenting a 29% upside using an SOTP-DCF valuation given its segment's differences in business model, capital structure, and tax rate. We use a 9.3% WACC for its generation and RES segment, while 9.4% for its distribution segment, incorporating interest rate increases for both. We then accounted for a terminal growth rate of 2% for its 3 segments, benchmark on the Philippines' energy consumption growth rate and energy inflation. Confirming our buy recommendation is a relative valuation, which reveals AP's lower EV to EBITDA multiple of 7 times versus its local peer average of 7.9 times, and its PE multiple of 6.7 times compared to the 11.2 times peer average, indicating that AP trades at a discount over its competitors. To further validate our valuation, we also conducted a Monte Carlo simulation across 1,000 iterations, which produces a 59% buy and a 37% hold probability. And lastly, we performed a scenario analysis to arrive at a bull target price of 49 pesos per share if all synergies had been realized, and a worst-case scenario of 25 pesos per share, which is unlikely given AP's tailwinds and effective management.
Given the economic uncertainties, we identified the top 3 investment risks based on probability and impact on AP's valuation. First, fluctuations in the coal and oil prices possess the strongest risk, given that it will impact AP's gross margins, as 74% of its net selling capacity comes from fossil fuels. To mitigate this risk, AP imposes coal hedging and contracting strategies. Our valuation turns to hold if COGS increase by 2% of the GenCo and distribution segment. Second, price changes given the possible recession that might happen. However, effective allocation of energy sales in BCQ and spot protects AP from sudden decline of Western prices. Our valuation turns to hold if forecasted prices fall below 30%. Lastly, a planned outages lead to low electricity reserves. To address this risk, AP aligns its plans to certifications, like ISO, leading to best outage management. Our valuation for our last risk turns to hold if forecasted energy output falls below 5%.
With its prime position to capture the surging domestic power demand, its aggressive green capacity expansion, and its favorable financial standing, further elevated by its top-notch ESG policy integration and effective investment risk mitigation measure, Aboitiz Power is indeed well-positioned in sustaining its industry dominance and in continuously Recharging the future.